Joining me now for a closer look at what's playing itself out in that market scene is Rekopantsoe Nare from Anchor Capital. Reko, thank you for your time and good afternoon to you. Hi, Reko, are you there? Ooh, I think your mic is switched off. Let's try that again.
Hi, Nolitando.
How are you?
Fantastic. Thanks so much for having me on the show.
Wonderful. Thank you so much for being with us today. Quite a bleak day. But I want to speak about today in a bit. But I think because we've just come out of this busy election seasoning and now we're all about coalitions, what we actually haven't done is reflected on May. Let's talk about May and the week, that the month that was. We often hear that, people sell in May and go away. Did we see anything of the sort?
Yeah, Nolitando. So this is after a very strong kind of mid-April into sort of half of May that we saw specifically out of our local market. Obviously, as you said, on Friday, we wrapped up the month of May and we basically saw the JSE All-Share Index achieving kind of a marginal gain of about 0.8%. What that does is it puts the All-Share Index at about negative 0.2% year to date. So in other words, sort of flat to slightly lower year to date. And what we also saw is we saw the capped Swix rising 0.9% for the month of May, which puts it at about 1.5%. So basically what we're saying is that, a lot of the gains and a lot of the outperformance that we saw within our local equity market, largely kind of those gains were given away kind of coming into the end of May. Of course, most of that on the back of concerns around the elections. You did see the SA, the so-called SA Inc. So for here we think of our banks, we think of our insurers, we think of our retailers. Those were the worst hit kind of in the build-up towards the elections. Kind of on the other side of the coin, you did have your industrial, specifically the Rand hedges, doing what Rand hedges should do, gaining about 1.7%. Think of the likes of Richmond, Process, and Naspers, up 13, 6, and 3% respectively, while our resource counters largely flat for the month of May, specifically here, the gold counters and the platinum shares. What that does is it puts our resource index at about 6.6% year to date, but largely flat for the month of May. And then finally, property continues to disappoint, ending the month of May 0.4% lower, while kind of financials, as I said, worst sort of hit down at about 0.7%, which puts it or puts financials as an index overall down at about 8% year to date. So I think from our side, what we are sensing ending May, ending sort of that election lull, coming into June, what we are seeing is we're seeing a lot of kind of sensitivity, a lot of caution from investors, and the All-Share Index reflecting that.
I mean, but then what we're seeing today, Erika, is of course these red screens. And I'm keen then to understand that it's not only here at home, it's also in Europe. It looks like globally sentiments are a bit, a bit negative. And I'm keen to find out what markets could be contending with here. Specifically surprised with the European markets because we're speaking about possible interest rate cuts with the ECB, but that's not quite showing up there.
Yeah, so, the current commentary that we are hearing is the likelihood of the ECB cutting before the Federal Reserve, I think, or the US Federal Reserve. I think, only the actual announcement itself will give the direction that the market needs. But I think overall, Nolitando, what we are seeing is kind of risk-off sentiment in line of, if we just think of kind of where the VIX and the volatility index currently sits, in line with the fact that, most of the global economy is going into elections this year. I think, traders, if you think of the S&P 500, which is currently up at about 11%, kind of year to date, I think traders just taking a step back, taking some profits off the table in anticipation of, the UK elections that we'll get in July, in anticipation of kind of the Mexico, the Indian elections that we're getting recently. And then, of course, we've got the all-important US election that will happen in November. So I think traders begin to take a step back, beginning to take profits, beginning to look very circumspect. I mean, certainly that's what we're doing, looking very circumspect at the market as a whole.
I want to get into some company news today. It's quite a busy one for us. Maybe let's start off with RCL. I think that's the most interesting one today. The listing of Rainbow. I'm keen to get your thoughts here, Reko. In my mind, listing a pure poultry play in this environment might not be the best thing, but I'm keen just to understand what they could be seeing that I'm possibly missing.
Yeah, so I think this listing story or strategy that we are seeing out of a few counters out of the JSE. If we think of if we think of Transaction Capital listing We Buy Cars, if you think of Pick and Pay potentially listing Boxer very soon, it's just a strategy by management to unlock value. In essence, as you said, that is the biggest poultry business. Rainbow is the biggest poultry business and biggest poultry producer in South Africa. It's processing about 4.1 million chickens a week. How they want to do this is they want to carry this out. The mechanism that they're going to be doing this is they're going to be distributing shares of RCL to kind of shareholders at a one-to-one basis, and in that way use that kind of new entity and list that new entity on the JSE. The date that they've given is the 29th of June, but I think Rainbow in itself, it's not a business to be scoffed at. If you think of their latest trading statement, they've got revenue kind of increasing around about 11%. The share price just today on that is up 6% on the announcement of the fact that they've given a date for that spinning off of Rainbow. The share price of RCL is up 6%. So shareholders, not taking that lightly and kind of seeing that fairly constructive. The share price is around about 11% as we speak, or rather 11 Rand as we speak, up 6% today. And that brings the share price up 22% year to date.
With that said, I want to get your stock picking a bit, but first I'd like us to reflect on councils that have found favor with your industry peers.
It's something a little bit different. It is World Bicycle Day today, so we're going with Shimano, which is actually listed in Japan. It is a maker of significant components for bicycles, all the parts that go into bikes, the complicated parts, and also a lot of fishing gear. What we did see is the stock off the back of COVID and huge demand for cycling went up significantly, but subsequently come down. But the medium-term outlook for bicycles as a mode of transport is a very ecologically friendly mode of transport. It's quite positive. A lot of large cities are embracing bicycles. Fishing is also growing quite nicely as an outdoor sport, and so a steady grower that could do quite well. So something different for the viewers.
This is aimed at somebody who's locked into the local market. It's your only option. You've used your allowance, whatever. You've got to buy a local share. In the short term, considering the political uncertainty we've got, I've thought the JSE, the company, not the stock exchange, is not a bad idea. You're sitting on a historic div yield of 8. Their costs are pretty fixed. And whatever happens, whether it be positive or negative in this country, I think you're going to see an increase in turnover on the JSE in the next 6 to 12 months. And that should flow directly back to shareholders, at least in the short term. I said 6, 12 months, potential upside to about 110 Rand, I think. So that's another 10, 15%. So more of a trading than an investment. But considering where we are locally, socio-politically, I think it's not a bad idea if you want to go somewhere locally.
I'm going with a US stock. It's called Ulta Beauty. They're a US retailer, which is essentially, they sell beauty products and they also do beauty treatments in-house. The opportunity for growth is still very strong as they roll out new stores and look at other regions. They're looking at Mexico, for example. They're very strong in the US, and they benefit from, I guess, the culture of the Instagram stage that we're living in, and that fuels beauty purchases. They have a very strong, loyal base of 43 million customers, and I think earnings growth will be in double digits for the next 3 years, and that provides a good opportunity for the likes of Ulta.
All right, Reko, we have some new ones today, that's for sure. Shimano, JSE, and Ulta Beauty.
Yeah, so I think from our side, the only one that I could possibly comment on is Alta Beauty. The reason for that is that we've held Alta Beauty in our offshore portfolios before. We've since sold Alta Beauty out, but in essence, I think as already highlighted by your market commentator there previously, it does fall within that sort of beauty retailer, that luxury beauty segment of consumer discretionary, or the consumer discretionary part of the market. And we're currently circumspect about that, just in light of where rates are, in light of the shape of the US consumer, in light of the recent retail sales that we've seen out of the US. We're basically saying that, we are seeing the US consumer beginning to get squeezed. That's sort of on the negative side. On the positive side, as far as Alta Beauty is concerned, you do have a competitive advantage that they have as far as having a large selection of merchandise to reach the 43 million loyal customers that your market commentator they already mentioned, which should sort of allow sort of a mid-single digit percentage sales growth. They're currently running a 14% operating margin, and I think, depending on where you sit as far as a bull or a bear case for Alta Beauty, the likelihood of that continuing. But as we said, we do have a question mark around consumer discretionary as a whole. So we are sitting on the sidelines on this one, although it is a company that we have held. And currently the share price is down 7.69% year to date. If you were thinking of adding it to a portfolio, I think maybe now is the time to consider it. But for us, from as far as the shape of the US consumer is concerned, we're happy to sit on the sidelines.
With that said, which stock pick do you like? I think we've got 30 seconds left.
Okay, fantastic. So my stock pick for today is Fortinet. It is one of the world's largest cybersecurity companies. We like the fact, that with the advent of AI and remote work, ransomware and the likes, companies will continue to look to bolster up their cybersecurity protection. It does trade on a 30 times PE, so not cheap. But we think that you are being compensated for that over a sort of 3 to 5 year view. It's got 700 organizational clients worldwide, and has ability to leverage that to selling to kind of other parts of their offering. Where they did get kind of where the opportunity for us lies in is the fact that they missed on billings. It was only a 1% miss on billings, and the market sold it down by about 10%. And for us, we think that offered us an opportunity to really just buy a solid medium-term value business. It's free cash flow positive. It has a net a cash position of about 2 billion rand. It's still owner-led. It's not a speculative pre-profit tech business, but it's a solid business that we like, and we think you're being compensated by compounding earnings growth in the sort of upper teens to low 20s over the next year or two.
Well, Rekopantsoe, an absolute pleasure having you this afternoon. Thank you so much for your time. That was your Midday Markets Update with Anchor Capital's Rekopantsoe Nare.